What's up? Welcome back to the channel. Today we're going to talk about pre-qualified buyers and pre-approved buyers. And a lot of times real estate agents and loan officers and buyers and just different people will always say, oh, well, are you pre-qualified or are you pre-approved? And a lot of times they don't even know what that means or what they're asking for. Other times lenders may say somebody is pre-approved when they're actually pre-qualified. Sometimes they know that difference, sometimes they don't. And sometimes when they do know that difference, they may be telling a white lie and saying, oh, yeah, they're pre approved, they're good to go. But in reality, they're not, but they don't want their offer letter to look bad to the listing agent or the seller. So they just tell them that. Other times you have AI and automated underwriting systems, and you got technology that's reading documents, and an underwriter's not even looking at it, but instead computers are, and they're making a decision, and companies are classifying that as automatically approved or approved with conditions or pre-approved or whatever the case may be. Many companies do that. So let's dive in and actually look at what these mean and go down each side. We're going to do just a simple T-chart here. So let me pull up my screen. And so here's pre-qualified and pre-approved. So in red, pre-qualified, it doesn't mean bad. I mean, I put it in red, but it's not the worst thing in the world because at least you're making those steps. So the first thing, if you're pre-qualified, then credit has been looked at. Credit has been verified. Hopefully so. I mean, if not, you're just simply working with the wrong person. If they're going and sending out pre-approval or pre-qual letters based on just somebody telling them they're good, that's bad. All right, so they're looking at credit. They're looking at what debts are there, what's your score, do you have any histories of delinquency or bankruptcies or foreclosures or late payments or anything, or delinquent federal debt like student loans, or anything that just may cause a problem in getting the approval. Application gets reviewed. So an application is called a 1003. That's getting nerdy. So in the 1003, you scan through and you go, okay, well, how much money do they make and how much do they have in the bank and all these things. And you're just kind of looking at their address history, their work history, and you're going off what the customer tells you at this point. You're simply going off what they've told you. You haven't verified anything. That gets to the documents reviewed piece. A lot of times, if something is in a hurry, I need it urgent, it's fast, it's a rush, then I've seen loan officers who will fire out pre-approval letters, pre-qual letters, either one. And when they do that, they're not even reviewing documents. They're taking the customer's word for it. And does it work? Maybe, but you also may be doing a disservice to your client and to the seller and to the agents. So it's a fine line to be walking and trying to get everybody on the same page and understand what's been verified to the point that you're making the offer. Um, like I said, the other thing is documents being reviewed. A loan officer is not an underwriter. So while you may have a great loan officer, if they miss one thing, then an underwriter is going to catch it. It could blow up a deal. It just kind of depends. But that's why documents reviewed is a nice step. At least the loan officer is looking at something. But again, if the underwriter doesn't touch it, then these pieces of paper that say someone's approved to buy a house, they're not worth the paper they're written on until an underwriter actually looks at it. AUS ran. What that means is that's the computer underwriting system. All it knows to do is approve them based on the credit report and then what you've told them and entered into the application. That's the only thing it knows. So if you tell them somebody makes $500,000 a year, then yeah, they got a better chance at qualifying versus someone who makes 50,000 a year. But if you can't verify the 500, then that approval is going to change. So again, AUS is automated underwriting system, but it only knows what you tell it. So don't get too hung up on that. That's why you need an underwriter to verify. Now, sometimes, like I said, letters are sent out without reviewing docs, which is insane, but it does happen. Now let's look at pre-approved. This is the one everybody wants. So all of the items from the PQ section, the pre-qualified section, are done. Plus, the loan is actually reviewed by an underwriter. So an underwriter takes the file, looks at the file. Pretty much all companies can do TBD underwrites now, meaning we're going to underwrite you before you make an offer. There's nothing wrong with doing that and trying to get something set up quick or set up that's a little more confirmed on the approval status. Now, not everybody will do that though. So that's the difference on pre-approved and pre-qualified, you got to be careful. But if you're in a hurry, it may take an extra day, 2 days, 3 days to get that approval done by an actual underwriter. So if you need an offer quick, hopefully everyone's acting in good faith. But that can be the slip up where sometimes a deal blows up. It's because an underwriter hasn't actually looked at it. Now, an underwriter will give you what's called a conditional loan approval, approved with conditions. And what you have to do is go through those conditions with the borrower and make sure everything listed by the underwriter that's the borrower's responsibility to turn in is possible. It's attainable. It's something they can get, and there's not any strings attached to those conditions that could mess up the deal. And at least you know early on if you have to figure out a workaround or change programs or whatever the case may be in order to help that customer qualify and making good offers and sending out legitimate letters versus just throwing something out on a PDF and a piece of paper. So that's it. Pre-qualified versus pre-approved. That's the difference. Pretty much 90+% of agents want the pre-approved, not the pre-qualified. However, there are a lot of times where they don't know which one has actually been done, and they're relying on the loan officer just to have a good track record of reviewing things, doing due diligence up front, and not having things blow up at the end. So hope that helps. Reach out with any questions, DM, hit me in the comments as well. Love the collaboration there. Visit chadwickanderson.com. Had a couple of you reach out recently, which I do appreciate and glad to help you. Also, make sure you please like, follow, subscribe, hit the bell, all the things. Follow on the other social platforms as well at This Chat is Real. Hope everyone has a great day. We'll see you on the next video.